What's up, guys? This is Tevin again from Simple Forex Options. We're coming to you guys with another indicator class. This indicator class, of course, or this lesson is going to be hitting on the MACD. Thank you guys for commenting. Thank you guys for the support. Also, thank you guys for watching these videos because they're very informative. You know, I'll be honest with you, there's hundreds of indicators. I've used a whole bunch of them. I know how to use them, but a lot of times you have to do it what works for your eye. So it takes a lot of trial and error just to kind of build a system and find out what works for you. But like I said, like I say all the time, certain things that work for you won't work for somebody else. So what you really have to do is kind of get knowledge and get educated on what indicators are used, what they're used for, and also to trying to show a relationship between one indicator as you know in relation to another indicator. But the one that we're going to be talking about today is the MACD indicator, or the moving average convergence divergence. That's the actual acronym or the name of it. To be honest with you, a lot of people use this, but I don't really use it like that. Now I know what it's used for, but I've never really made much usage of it. Now what you just saw is just a regular MACD, but what most people use is the histogram. This is what they use right here. This is what you'll commonly see, and as far as a MACD indicator, you'll usually see it formulated like this in the form of a histogram. Now when you come over here, these values that you see, all these values are, you're talking about short, you're talking about long, and this is the trigger. This is supposed to be just a signal trigger, whatever it may be. But these are two exponential moving averages. They're not simple, but they're exponential moving averages, or if you were to put in abbreviations, they're called EMAs. This long is a 26 EMA, and this short is a 12 EMA. And the way that the MACD value is actually calculated is by subtracting the 12 EMA from the 26 EMA. So give me a second. I'm sorry, actually I said that backwards. It's from subtracting the 26 EMA from the 12 EMA. That's how you get the MACD histogram. Now what you'll notice is the way that the MACD works. Well, the way that a lot of people use it, some people use it for crossovers because it is a momentum indicator. It's a momentum trend indicator. So a lot of times people use it for crossovers, and they also use it to show or to give an indication of where the markets are at. So for example, if they see that the MACD right here is down below this, they know that they're taking sell options. If they see that it's above, they know that they're taking buy options. If they see that it's below, they know that they're taking sell options. Now most professional traders don't really use the MACD for that. A lot of times they use it just simply, sorry about that, a lot of times they use it just simply for divergences. And what a divergence is, and if I were to give you guys an example of what a divergence is, I'll probably have to put this on a bigger time chart so you guys can see what I'm talking about. And this MACD is I guess because it is new data, is like very stretched out. But if I were to show you guys what a divergence is, a divergence just means that one point is higher than the other point, but it doesn't match together with the charts. This is what a MACD divergence is used for. So for example, you'll see right here, let me see right here, perfect. This is a perfect note. That's not a perfect example, that won't work. Okay, this is a perfect example of what a divergence is. If you look right here, you'll notice, and I need to get some kind of line. So if you look right here, you'll notice that, all right, let me remove this again. You'll notice that this MACD is higher than the low of this MACD. Like right here, you see that it goes down. So from this MACD to this MACD, you see that it's an actual divergence down. But if you look on your charts, if you take these values, oh, nope, that's not the right spot. If you take this right here, bam, and you put it on this low right here, you see that it goes up. The fact that I have trend lines there goes to show that you guys can see a little bit better. But as you guys can see, you see that this part is going up and you also see that this part is going down. This is what a divergence is called, and a lot of times people use this to show that the momentum for something may not actually be as momentumous as it was before. I just made that word up, so don't steal it. But the point that I'm making is if you see on the MACD that this is going in a downtrend, but you see on the charts that this is going on an uptrend, what this is an indication of is that this is just a indication of a higher low, which means that the market is more than likely in an uptrend and that it will continue to go up. And as you guys can see, you can't really get a good glimpse of it from here, mainly because the markets was shooting so much, so it's going to show it as flat. But as you guys can see, it comes down, you have a higher low, and after it bounces off of this higher low, it goes into a slight uptrend for about 2 hours. So this is actually the purpose that a lot of people use MACD for. Like I said, a lot of people don't use it for crossovers. They use it for this very purpose right here. And be honest with you, because I hadn't used it much, I don't really have any recommended settings for it. What I say is you test your settings out, see how you like it, yada yada. Now, what I personally like, and it's mainly because I've gotten my feet wet with this beforehand, but I like the OSMA, or the oscillating moving average. And this is technically pretty much the same thing as a MACD. It's not that much different, but it's just an oscillating moving average. And I actually like this one better, mainly because I like it purely for crossovers. And to be honest with you guys, on an hourly time frame or a longer time frame, not shorter time frames, but shorter too. But on these time frames, this thing would be a beast on the oscillating moving average. Now, if I could just find it, it's an OSMA histogram, and I don't see it right here in the O's. This is very weird. They may have a different name up here on Freestock charts. That's so weird. All right. Well, you know what? The MACD, I'm tripping, bro. Okay, this is where I mix up because I use MT4. I don't use Freestock charts. I use it to kind of aid my systems and all that kind of stuff, but I don't use it anymore. The MACD histogram is the same thing as the oscillating moving average. So please forgive me for my stupidity. They just on MT4 you'll see it as OSMA, but on MT4 as well they have also MACD indicators. So they have two of them, but they're essentially the same. But you could get indicators or custom indicators, and that's people just name them differently, but they're really the same thing. And yeah, I should have noticed that because the values and all that stuff is pretty much the same. It's same explanation. Now, matter of fact, since we're talking about this, I guess I do use MACD very often. I have certain settings this is for me testing different settings, over a span of trading. And I have certain settings that I like to use for the OSMA. I'm gonna call it an OSMA because that's what I've always called it. So I'm gonna call it OSMA. And the settings that I think are the best settings is the 5, 20, and 5. I found that it works best on hour time frames or longer. You don't want to use it any less than that. You can, but I wouldn't suggest it. I would say hour time frame or longer. And what you want to do is you want to get on the signal right when you see that it crosses over in the next bar. So if you see that it's getting close to that middle threshold, right, and you see that it's about to cross over onto the other side of the OSMA, that's usually a strong indication of a downtrend or an uptrend or whatever it may be. So what I would say is you can use it purely in that manner. Now, some people, they don't want to be watching charts all day to wait for a crossover for hours and hours. So what I would suggest is finding some kind of alert indicator or something that you can, or even try to make one. There's ways that you can actually make indicators or make it to where it alerts you of something. I know that you have alertfx.com, and on alertfx.com they alert you of when a certain strike or when a certain price hits a certain strike, but they also alert you when certain indicators or values cross over and whatever it may be. So you can get it through text, whatever it may be. So for some reason this free start charts, man, it just be killing me, bro. It just acts up sometimes. So 1 second. It says I can't reach this page. Oh, you're so annoying. Let me try to type it up all over again. Alright, let's see if this works. Sorry for the hold up, guys. We're gonna get it right. What I may just have to do, open up another tab. May have to try it that way. There we go. Bang bang. I hate Internet Explorer. I know you guys heard me say that before. I just do with a passion. But it's the only browser right now that you can use free start charts on. You can't use it with Firefox no more because they don't support they don't have Silverlight support. Alright, well, give me a second. I don't want you guys to be looking at my login information. So matter of fact, I'll show you guys right here. Since I don't have to log in and all that kind of stuff. So like I said, we had it on hourly time frames. We had of course it was on candlesticks. That's what you want to use. And this is actually a strategy. So this is not just an indicator trainer, but it's a strategy in itself. So let's say you take the Euro USD, bam, and what you want to add is MACD histogram. I really thought they had the OSMA up here, but call it a MACD histogram. I guess they're the same thing. All right, so values was 5, 20, and 5. And what you are looking for, of course, you're looking for crossovers. These are kind of choppy, so I would say you want to filter those out. But let's say you take hourly, and let's go back a little bit. We're going to take you guys back to show. I'm going to show you an example. If you see that it's been down here for a good amount of time, right? And let me see if we get some arrows in there so I can show you guys what I'm talking about. You see right here, this is where the MACD crosses up. Bam. And this is where you see the up move. You see that crosses over right here. You see that crossover? Bam, you see that up move. That would be ITM if you would have get in on the beginning of that candle. Another example over here. And I'm not even going to try to spot them. I'm just going to show you guys straight up. This is just crossovers in itself. You have right here, it's a crossover right here. Oh, I got to turn that around. All right. You got your crossover right here. Bam. Make sure I got it right. Crossover right here. If you see that, if you get in on the beginning of that candle, that would be an ITM. Let's take you guys. Well, I'm gonna take you back and I'm gonna take you forward. Right here, you see it's been up for a while. You got a crossover right here. Crosses down below the MACD. Bam. As you guys see, same thing up here. Crossover. Bam. That's ITM. All right. Now, mind you, this doesn't happen much throughout the day. If you use it on an hourly time frame, you're going to get this every now and then. And you see it happens at very awkward times. But if you did have something that will notify you of when this will happen, then you'll be in good hands. Now, look, yep. There you go right here. Cross down. Bam. Cross down. All right. Turn it up. So as you guys can see, it's another example. Cross down, cross down. Let me make sure I got this right too. All right, this is actually, this is supposed to be right here. Okay, bam, right in line. So look at this. This is crazy. As you guys can see right here, because this has been up for a while, you got a crossover right here. Bam. And you got that crossover right here. Okay. Bam. Yep. That would be ITM if you got in on the beginning of the candle. As you guys see how this crosses down, you wouldn't take that. It hadn't been over. It hadn't been over that much, so you just leave that alone. But if you see this right here to where it goes up for a while, then I would take this. I would go get me an arrow. Bam. And there we go right there. Same thing. Just over and over again, guys. This, I mean, you can, this is like, you can do this over and over again. Let's see if this one comes ITM. This is another one. All right, crosses over. Let me move this right here. Bam. And actually, this right there, this will actually be, yep, it is the right candle. Bam. And there you go. Got another one. So yeah, you see right here, spike up. It doesn't. If it crosses down, it's not down enough. This one, it's not really down enough. That's not prominent action. This one, you see that's a nice little good movement above, and you get down on this one as it crosses over. Bam. And as you take it up, that's your winning candle right there. Even though the candle before it was in the uptrend, this one still came your way, it went down. As you see, not enough movement, not enough movement. This is like very small moves. There's nothing you can really use. If we were to go back, I'm gonna give you guys an idea of what I'm talking about. If we were to go back and right here, this would be 1 ITM. Right here, this would be 2 ITMs. Right here, this would be 3 ITMs. Right here, this would be 4 ITMs. Right here, this would be 5 ITMs. Right here, this would be, I got these candles lined up wrong. So this will actually be the candle, and that would still be ITM. So let me see how much I had so far. We had 1, 2, 3, 4, 5, 6. Okay, that was, yep, cross down candle. 7 and 8. So yeah, the point that I'm making, man, that's pretty dope. I probably need to toss them back on my charts. But yeah, the point that I'm making is that with the oscillating or OSMA or MACD histogram, you can actually use it for crossovers. I have never seen anybody use the values of 5, 20, and 5. If you guys find anybody, let me know. But these are values that I found out myself that works the absolute best. Now, I used to use these prominently when I traded binary options, mainly due to the fact because you would enter in the moment that a signal opens, you would enter in around that time, because I used to do a lot of time entries as opposed to strike rate entries. So the point that I'm making is that with this could be a powerful indicator. The only problem is that sometimes it happens through awkward times throughout the day, and it's very hard to be able to like, you may not be up or doing something, or you see what I'm saying. So what you have to do is you have to try to get on this quick and try to get in on the beginning of the candle, because it's more than likely going to finish bearish or bullish, whatever arrow or whatever way the crossover is happening. But yeah, that's my take on the MACD histogram, aka oscillating moving average. This is how I think you should use it. There are other people who use it in totally different ways. A lot of people, professional traders, uses it for the purposes of divergence, but you can also use it too as well for binary options trading, probably forex trading on longer time frames to take profits. or you can use it for, and I'm trying to think other ways that people can possibly use this. But yeah, this is just my take on it. But all right, guys, hope you guys enjoy. I'm sorry that this video was a little bit longer than it should have been, because I was taking you guys through like a strategy or whatever like that you can use. So hope you guys enjoy. Stay tuned for more videos. Of course, like I said, I'm going to be making them like a couple a week or every other day or something like that. So if I don't make none over the weekend, I know for a fact my schedule that I'm thinking about doing is maybe like one on Monday, one on Wednesday, one on Tuesday. One on Wednesday and one on Friday. That way you guys can have a plethora or 3 lessons that you guys can run through on a week or weekly basis, and you can actually demo stuff and try stuff out within those in between days and see what you like the most. But all right, guys, enjoy. Stay happy trading. Please trade safely, make good decisions, and deuces.